So my observation is that most people who dabble in stocks really aren't investors. They're speculators. They're just out to make a quick buck. Okay. They heard some hot stock tip and they're trying to buy low and sell high. To me, that's a speculator's mindset. And I've been in the world, immersed in the world of finance long enough to know that the deck is stacked against people when that's their mindset. So we always should remember investing is about ownership. When we invest in something, we take ownership in it. So if we understand this, it stands to reason that we should invest mostly in the absolute best businesses that we can. Ones that we wouldn't mind owning for a long period of time. Okay, so when it comes to stocks, we want to focus on boring businesses that do nothing but crank out free cash flow for investors, quarter after quarter, year after year. For example, some of the world's best property and casualty insurance companies fit that mold. They said the best ones make great investments. Okay, so after many years in the investment research industry, the approach that I've found to work consistently in the market is simply to accumulate shares of the best capital efficient stocks over. Then leave them alone. Let them compound. And I know most people have the mindset that you buy a stock and hope it goes up. And if it goes up enough, then you sell it and you make money, right? Now you've got more dollars. But what do you do if the stock doesn't go up? Those with the speculator mindset, they're going to give in and they're going to sell for a loss. And that's probably what they should do if they bought a crappy stock. But if you buy capital efficient stocks, they're going to pay you dividends. And if you reinvest those dividends, your investment will compound even if the stock never goes up. But that said, the stock's going to go up if you buy these kinds of companies, because anybody who knows how to analyze a stock, anybody who's trained in equity analysis, they can see that these kinds of companies are head and shoulders above, everything else. So the approach that we suggest is simple. Routinely move just a little bit of money into the world's best stocks whenever you get paid, just like we're doing with gold and Bitcoin as well. And again, it's all about consistency. Even if we're only buying one or two shares at a time, the types of stocks we're talking about, they're not penny stocks. They're not trading at $5 a share. But even if we only buy one or two shares at a time, it's going to add up. It's going to compound if we stick with it. So it is a slow game at first, but when the dividends start to compound, that's when we can be, I think we'll be amazed at how big our portfolio can grow. Okay. And that speaks to the final point I'd like to make on this today. Investing is not about getting rich or trying to retire early or anything else of the sort. I think it's of it quite as the opposite.